Hello, and welcome, guys, to our 116th edition of the Trading Opportunities webinar. This is Nirav, and let me just check the stuff, audio, everything at my end before we actually proceed with the webinar. And obviously, if you guys are also live right now with me, then let me know in the live chat section, of course. Hello, mic test, mic test. Hello, mic test, mic test. Working at my end. So, guys, before we proceed, a very quick introduction about what is this webinar, who am I, and what we'll be discussing over here is. So, my name is Nirav. I'm the admin owner of 50 Years Market Analysis YouTube channel as well as 50years.com website. And this right here is the weekly series of webinars called Trading Opportunities, where I use my understanding of advanced Elliott Wave concepts and price action to apply that on live global markets and come up with actual trade setups. In the past 115 webinars, we have so far captured 282 trades, including 4 setups discussed in our 115th webinar. And obviously, all these webinars were conducted live every Friday. And the time is always 7:30 p.m. IST or 2 p.m. GMT. So if you are in some other time zone, obviously convert it to your respective time zone to join in live, right? With that being said, let's now head over and see a few more things. So you guys probably would already know if you are attending these webinars. I'm also the author of this book, Think with the Markets. You can check more details on Amazon or on our website, where we also have a related specific private course for it. And I'm also the author of the course Complete Guide to Professional Trading with Elliott Wave with the 1600 plus students. If you are new to Elliott Wave, it's highly recommended that you go through it. If you do not want to make an investment right away and just want to understand the webinar, there is a free version of the course, which is on our website. The link is in the description of the YouTube video, and the link will also scroll down on screen in a few moments. So it is highly advised that you check that. Otherwise, you will probably not even understand what I'm saying during the webinar. Right. And lastly, before we proceed, here is the track record of all the forecasts that I have done, forecast analysis, whatever you would call it, since 2015, 16, whatever this record is from last 7, 8 years. Let me just refresh this page before we. 2016, we had an accuracy 83.34, and these spreadsheets, they do take up some time. And all the stuff that you see here is basically the date of the webinar, the instruments which we have discussed, the outcome of our analysis, all posted in a spreadsheet format. And right here, you can see 2016, we had an 83.34% accuracy, 87.5. So on and so forth. You can see we have accuracy ranging upwards of 80% since the last 6 years till 2021. Since then, we started doing these webinars much more regularly, weekly basis. And we have, as I mentioned, captured 282 trades so far in the last 115 webinars. So you can check all that. It's all public record, date, instrument name, analysis, link for the video, and outcome of analysis. Everything is very clearly mentioned here. And this is specified because this is much higher than all industry standards, completely transparent, done live in front of you guys. So just to establish the credibility there. So with that being said, let's now head over and see the format of these webinars. The format will be the same as all our webinars. We'll go over the charts of Euro USD, crude oil, gold, S&P, and in the end, we'll discuss the chart of Nifty followed by Bitcoin. After I discuss every chart, I will ask if you guys have any doubts based on the analysis we have discussed. And if you have, you can just post them in the comment section. Otherwise, we'll just move over to the next chart. So that is how we'll proceed here. And with that being said, let's now head over to our charts section. Let me just quickly load up the last webinar. And by the way, I can see people are online. If you can also confirm audio, video is working at your end. I'll check mine. At mine, it's all good. A confirmation from the crowd will be better. But nevertheless, I don't want to delay. Let's now proceed with our content. Just one last moment. I'll check feed on LinkedIn where we are also streaming live. It's working. So yes, let's now proceed with our content of this current webinar. Okay, there was chat which was not visible previously. Oh, okay, maybe some issue or something. It's all showing a 749. Okay, and hello Martin, and thank you guys. So let me just quickly start with the chart, and then I'll look at the remaining chart here, guys. We will start off with the chart of Euro USD, and before proceeding with the chart of Euro USD, let me just quickly check what was being discussed in the last webinar on this chart. So here we have the recording for the Euro USD. Let's see in the last webinar what were we saying here. Oh, I have opened this 116th. So here it is, the chart of Euro USD from last webinar. Let's load up the time where we were discussing this. Okay. So in the last webinar on Euro, we were discussing the possibility that we expect the market to go down after this diagonal formation. So as you can see, I'm pointing out, let me just speed this thing up. So I'm basically pointing out that I was short and the analysis was this. Let me zoom in. Analysis was that we are expecting a corrective leg down, A down, B up, C down, possibly zigzag, maybe some other pattern as well, but basically a move below this channel, this white channel. That's what we were expecting, right? And the date was on the last webinar, 16th, right? Since then, let's see, the price was 1.08603, and this one did work out. And let's quickly check that on the live chart, of course. Here's the live chart. You can see 16th was here somewhere. Somewhere here we were discussing this market on 16th. And since then, the market has done both things. It has gone down as corrective three ways down, as well as it has also gone below the white trend line, which I was expecting it to break. So overall, this analysis played out picture perfectly. Of course, if you guys were live here with me and checking this out, let our audience know that you were able to capture it live with us or track it live with us. It's always good to see some more participation from the audience that way as well. Right. So that's about it for Euro. Let me just update it. Don't need this. Right. So what's the setup now? The setup now becomes that we expect this market to go. Okay, I have not removed this text thing. One second. Yes. So setup now becomes that we expect this market to go up. Now, however, there is the thing that wave two here may still have some downside remaining. There is never a confirmation for it. So I will be open to some what do you call short plays as well if it takes out the low breakdown, breakout, whatever you'll call it. Right. So break below this level of whatever this low is at your chart. Different data feeds may have a different variation of the price. We are currently using this data feed. Right. So your data feed may have a slightly different price, but below 1.08055, we will be interested in short-term scalp trades to the downside, of course. And if the two is complete, the confirmation will be the break of the high, of course, which is 1.08936. So the break of this high to the upside, of course, will be a trigger for long trades. So long story short, it's a wait and watch market. We can have plays on both sides. There is no confirmation yet, and pretty simple enough. And if you want to participate with the trend, the current account is suggesting that the trend is to the upside and not downside. So I'm more interested in taking bigger size positions to the upside, and shorts, if I have to take, I'll prefer to take them small size positions on this counter. Right, that's about it for our discussion on Euro. Let me check the chat, which I have not checked in a while. Hello, Martin, and Thit, I'm not sure how to pronounce it. Setia. And thank you, Martin, for the confirmation. And thank you for the confirmation. Hello, Sushil. Nice to see you here again. So, guys, that's about it for our analysis on euro. If there is no doubt, you can just type in understood, or if not, I'll just move along to crude oil, anyways. And here is our chart from last webinar. Yes, here it is. So let's discuss what we were discussing on crude oil at that point in time. Somewhere here we were discussing crude oil chart. Let's see what was being said on this chart. So the analysis, from what I can recall, was that we were expecting some counter trend play as a C leg up. And basically the setup you can check at your end by playing the whole recording. But the main idea was that we will be looking for longs above 80.44. And the idea would be to look for this corrective up leg, right? The wave C up. Now, it did not really go as per our expectation, but let's just check that on the live chart to be more clear. 16th, 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 somewhere here. So the setup was 80.44, long above somewhere here. The market did go there, give us some minor upside movement, can say a false trap, and then it went down. So basically, the count was changed after after our discussion, basically. But as far as the last webinar is concerned, it did not really play out as per our analysis. So what is really going on here? And here's the updated view. I'll just delete this and show you what we are thinking here. Yeah. So here is the updated view. We are expecting that from this point of reference, which is the price level of 87.97, which is also the starting point of this analysis, we are expecting an impulse in the downward direction. Once an impulse is complete, we expect a correction, and then once this correction is complete, we expect another leg in the downward direction. So in this particular case, we are expecting that possibly the correction is complete over here around 76.831, and after that we are possibly seeing a flat correction, more specifically regular kind of flat. You can also call it running. I wouldn't call it running, even though it's kind of a mixed bag here, may transform into something else, who knows. But anyways, for the purpose of the price action on screen, it does look like a flat structure is in play. And within this flat structure, the idea is that I'll just draw it on this rough right hand side. What I'm talking about is that once an impulse, which is a five-wave progression in the downward direction in this case, is complete, we are seeing a sideways movement, a box kind of movement, because if you draw a box from here, you will find that the price is moving within it. So within this box kind of movement, we can label A, B, C, and call it different things. More specifically, a flat in this case, from what looks to be the case right now. And once this box movement or flat structure is complete, we expect a downward movement in play. So it can go up a little bit, or it can propagate within this box range as well. It is unclear what it will do, but whatever it will do, we expect that further downward movement is going to be a possibility here. So we're keeping that in mind. The idea is to remain swing short for now, unless we see something very different, and that would be technical break. Technical break basically move higher than this high. So anything going higher than 79.82 will be a red flag that this count may possibly not play out. So for now, we have an A up, we have a B down, possibly, or maybe continue, who knows, and then a C up and short place, right? So my personal bias will be in the next session. Most likely, I'll look for creating small short positions, stop loss at the technical levels, 79.8 or perhaps a little bit higher, and then look to add as the market goes lower, right? Maybe one third entry here, maybe one third here, and so on and so forth, or maybe the whole position here at the break. So that will be my play on CL. That's the outlook for now. And do keep in mind, I personally think that this sideways movement can continue for some time here. So the position sizing has to be kept keeping that in mind. margins, etc., have to be kept in mind. If you know what I mean. I don't think I need to explain this anymore. That's about it for our expected play on WTI crude oil. If you have any doubts or questions, you can just post them in the comment. And hello, Louis. Good morning to you. So with that being said, I don't think there is much to discuss on CL. We can now head over to our next chart, which will be the chart of gold, which has I was long in the last webinar, as you guys already know. I was also long in the last webinar. So booked multiple profits on longs in the sequence of these webinars. And we'll now look at the current play. So I'm not seeing any doubts or questions here. So what I'll do is just head over to our chart of gold. Good morning, Philippe. Nice to see you after such a long time. And here is, let's load up gold somewhere here. So gold plays, if you are following us for quite some time, even for the last 2-3 webinars, you would have noted has performed exceptionally well. Other than some minor short-term plays, almost all the major trades I've taken on gold have worked out. Not just in the webinar, also in the private Slack group. As you guys already know, I have a private Slack group. If you want to take the opportunity to see my trading action and analysis, of course, live, then you can just hit the details, get the details from the link scrolling at the bottom, right? So now let's see what was being said. What am I drawing here? Yes. So I was long on gold from somewhere here. I think exact levels I don't recall. This is a week gone. I have taken multiple other trades on it, so I don't recall the exact level. But I think the idea was it will continue either long or go sideways. So since I was long since somewhere here, roughly speaking, I was just trailing my stop losses. I don't know what the trail was at that point. Must be around 2380. And my trail was later on hit. I think I adjusted it to a little bit higher level later on, and that was hit. So I was able to get out in profits again on this series of long trades. So the main ideas in this webinar, you can check the whole thing. It's a lengthy discussion starting at 17, ending at around 26. So around 8-9 minutes, something roughly speaking, was a discussion. So main idea was that either gold can just continue up here, and in that case, I just need to keep what do you call trailing my stop higher, etc. And if that does not happen, our secondary idea was, which I was expecting to be the more likely case, was that this market will just go sideways, right? And by sideways, I meant I had drawn this rough box and it could just propagate within this rough box, right? So these were the two main ideas. Let's now check the actual chart of gold. And nice to see you as well, Philippe. And your guidance was so. Thank you for pointing that out for our viewers. And yes, guys, so those who are always live in the chat, if you are following the counts or last webinars and so on and so forth, do kindly mention that in the live chat. Your comments here are highlighted in the YouTube video, and that helps to establish credibility among newer viewers, right? So that's kind of important. Thank you for pointing that out, Thit. Right. So now here's the chart of gold. As I said, my long position was from somewhere here. And guys, if you are not following previously, I also had longs before this as well. And we have had longs here. I don't know. We have taken so many longs and even the minor shorts as well in this gold. It has been a spectacular, what do you call, instrument to follow for making profits, of course. Right. So Sushil has pointed out that our play trail was 2421. Okay, thank you, Sushil, for letting us know. So I was right near the end. Okay, that's good. So wherever our entry was, somewhere here, roughly speaking, we were able to get out at 2421. Just to point out, Sushil is in our Slack group and he was in the trade with me, I believe. That's why he can recall it. Right. Lot of upside captured. Yes, Sushil, we did capture a huge move there. And 1 second, there is some issue. Got fine. Yes, so our trail was here. Our long position closed here somewhere, roughly, I don't know, 50 plus points, let's say, were captured here. And before that, also, I think 30 or 40 points were captured here. And Rest, I just leave it to you guys. We have captured a lot of trades here, and before that, etc., etc. I'm planning to release a separate work on gold later on, but we'll discuss more on it as it progresses. So, what's the play now? What I think is happening here is, let me just load some stuff here. We seem to be having from this point of reference, which is the price level of 2430, a possible correction in play. Correction in this specific case looks like a possible flat correction. Basically means that the price is moving sideways, kind of like in a box range, as you already know. And in this case, the expectation is that the market will possibly or hopefully not cross below the low. If it does that, if it goes below 2278, that is a absolute red flag. That is not the analysis, and that is not what a strongly bullish market is expected to do at all. So that's why you can see I have already pushed an alert there. I currently do not hold any long positions here. Once we exited here, I have not created any substantial longs at all. Actually, I was short here. I created a short position here. It was a scalp short, booked some profits as it went lower, and that's about that. I have not entered any big position after that. Let me see if I can point that out as well. Trail, yeah, there it is actually. So this was the discussion from last webinar. Actually, why not check it? So far, so good. Trailing stop loss 2421. That was the count after the webinar. Date May 20th. And we had trail to 2421. Let's see what happened afterwards. Updated trail was hit. Longs auto closed with 50 plus points. So that was the analysis which we discussed in our last trading opportunities webinar publicly, right? After that, I have taken a short, booked profits on shorts, as you can see here, as I was mentioning. It was around 2406. My shorts were obviously above that level and did not wait too much here. Maybe some minor shorts were taken again, but the major position was closed around 2406. So far, gold has been good for both upside and downside plays. Now, coming back to our current analysis, as I was mentioning, we expect that this market may continue sideways for the corrective structure, can take multiple different formations. The one I have pointed out is just the most expected one. It is not supposed to be the one which plays out. So we will see how it goes. The idea to play this market will be to look for only and only long setups. Conservative view will be to go long above 2436, which is near the last high. So let's say 2440 plus, we will go long above 2440. And extreme case scenario that this count is not working out, that this is some sort of high here and this market has to go much, much deeper. For that, we will wait and watch and let the market tell us, and the market will tell us by going below. What is this? 2286 something something level, specifically 2278, as I pointed out. So below this, it will be a short play. Actually, not a short play, it will be a cautionary thing. I will not be taking new longs, but may take some scalp shorts or may reanalyze and wait. Will only time will tell. So we'll see as it goes. But so far, the bias still remains bullish. That's our what you call hypothesis one. So wait and watch on gold with the idea to look for breakout longs. Perhaps I will enter some longs before 2440, minor positions around 2386, but that remains to be seen. It has kind of given a deeper pullback than what I was expecting. So that's about it for gold. I don't have anything to add. I don't have any position either here, so not much to discuss. And with that being said, if you have any doubts, you can just post them in the live chat, of course, right away. Otherwise, we'll move over to the chart of S&P's 500, which will be followed by Nifty and the last chart of BTC, Bitcoin. So here is our recording from last webinar. Let's just quickly navigate to S&P 500's chart, discuss somewhere here. Let's see. So the count we were discussing on S&P seems to have played out nicely. and let's see that on the actual chart as well. So if I play the video, it actually has played out picture perfectly. So this is the discussion from our last webinar on 16th, right? And the play was that we were looking for this pullback for wave 4, this pullback for wave 4. And once that is complete, we will look for up move, or we were expecting an up move, I should say. So that is the same thing which I have pointed out with the counts here. Let me zoom in. As you can see, we were expecting wave 4 pullback, then up leg. Price at the point of at the time of analysis was 53.02. And now let's head over to our actual chart here. Here's the chart of S&P. Here is the chart, and 16th. Let me go to 16th, 16th, 16th. Here is 16th, price somewhere around here. So somewhere here we were doing the discussion. The market has gone down, then has gone up, literally as per our analysis, picture perfect play. And I did have some long plays here. Some were taken during the webinar, I think, and some were taken either before the webinar and some were taken after the webinar as well. So a lot of good plays here. Currently, I don't have any position. A reason being this 5 ended a little bit before our expectation. So basis on that, I did do some what do you call detailed analysis and thorough analysis, and came to the conclusion that this level, what is this, 53.25, right, is an important, extremely important resistance level. So it is of vital importance that the market sustains above it, and we are on 1 hour chart. So I can't really point out the importance of it, but it is importance. Its importance comes from what do you call much higher time frame analysis. I'm not going to discuss that here, right? So yeah, of course not. That's what I mentioned here in the webinar. So what we have is, as I said, a strong long-term resistance at 53.25, right? So the theory comes out to be this, that we want to see the market navigate above it, maybe take support on it, and even if not support, spend some time above it. However, on this 1 hour chart, you can see very clearly the market was not able to do much above it. If I just close it, 1 second, 53.25. Let's just close it and see. Now you can see the importance of this level is so immense that the market, even though navigated above it, was not able to close above it on a daily basis. That's the importance of doing a higher time frame analysis. So you can see clear hesitation at this level. So that's why I'm out of S&P as well. Did not create new longs after that. So what we are going to do is look for long plays only and only if the market goes higher than that level, right? Or at least navigates near that level. The conservative play will be to wait for the market to go above it, spend some time, and then actually take support, something like this. Or support does not have to be always at the exact level. It could just navigate a little bit above and below it. That's also fine. But more or less, the story remains the same. We want to see something done above the level of 5325, right? So unless it does that, everything else is just fiction, nothing concrete, whatever the words you would like to use, right? So that's about it for S&P 500. So wait and watch kind of market with the long plays only possible above 5325, which I'll just call as our hypo one, and we look for longs above 5325. That's the main play. Longs, if there is sustenance or support, let's say 5325. That's the main theme here, right? Second thing is, if this market is correcting for a wave 4, it will give some downside correction. I do not want to discuss that play in too much detail. The reason being that it's a counter trend play, and I'm not really sure how much of you guys really understand how to make counter trend plays. Everybody in the market seems to be what do you call, in a class of their own, and risking money and losing everything. So I don't want to speculate or give you ideas for speculation in the short term too much here, because I know for a fact most people are not able to navigate corrections. no matter how clearly I might be seeing them. And as a matter of fact, they may become unclear at any point in time. So that's about it for our discussion on S&P wait and watch for hypothesis 15325. And yeah, one thing here, if the market goes below 5222, I have marked its level, then there is something definitely wrong here, and then possible discount is not going to play out. You do realize this being a longer time frame resistance means the market does have the possibility for downside. I'm not discussing it right now. The reason being we want to see some confirmation, and that will be below 5225. That will be your hypothesis too. Looking for short plays or setups below this. That's about it for our discussion, and let's just check the comments. Obviously, if you have any doubts, questions, posted in the live chat before we move ahead with our next charts. Nifty followed by Bitcoin. And yes, guys, before I check the comments, I have a request, very small request. If you guys are enjoying this content, kindly do make sure to share it with your friends, colleagues, and trading groups in Slack, Discord, WhatsApp, Telegram, whatever you guys use. We definitely need more views, and this whole analysis takes a lot of time, a lot of effort. Generally, this kind of content is paid and closed behind a paywall. Sorry, and in this case, I'm expecting some kind of give and take here. I'm putting some time here, so you guys kindly do your part and share it. I would expect if you share it with 4 or 5 people or contacts, that will be extremely good. We can have an extremely huge reach. And just in case you did not know, I have also made a free course available to those of you who are not enrolled in my paid course, which has 1600 plus students. If you do not want to make the investment right away, that's all right. But you will not understand what I'm doing in these webinars. So do go through the free course 2 3 times. It's available on the link scrolling beneath the screen on the blue slider or whatever it's called. And it is, I think, 1 hour long. Roughly speaking, I don't exactly know, but it's definitely valuable, and it is required that you go through it unless you want to just come here and do some gambler kind of stuff. Then why are you even coming here? Right. So that's about it for my request. Now let's just check what the comments were. Anything on the big bar yesterday in daily bar? Any ideas at big bar yesterday in daily bar? So there has to be no ideas, as I just mentioned, Philippe. It's the same. Saw the bar and I checked my long-term counts, and then I realized I had a resistance marked here. So sometimes these things are missed because I have a lot of lines, as you can see over here. I think only 3 here, but some charts have 6, 7. So I specifically went out of my way and made it a dotted line. So it's just a long-term resistance coming out in play, and that's what causing people to sell off. I think there was one possibility though. Yeah, the possibility was basically if this resistance does manage to sustain, we can see deeper pullbacks like this, right? So that is the other scenario which would come into play if these things do play out, right? So again, I don't want to discuss targets for all that. As I said, 52.22, if it crosses below that, only then we'll be interested in all that. Actually, personally, I think I can take some scalp shots below 52.58. So I'll push that there. But other than that, I'm not discussing anything in detail. But it has opened itself for this big possibility. Right. That's about that. Let's now head over to our last 2 charts, Nifty followed by BTC. Okay, Philippe. And for the guys, keep an open mind, your analysis to yourselves, and share the webinar. Thank you, Martin, for that message. Martin, doing my part. So one of our regular viewers and also a student in the video course. So let's now head over to Nifty. So when we were discussing this chart last time, I said that actually I'll just show it in the webinar from the last recording. So here is the last recording for Nifty 34, 33, whatever, something. Yes, so somewhere here we were discussing the last in the last webinar the place for Nifty, and the main thing which I discussed. How is that not loading up? Yeah, there it is. It's all loaded up now. So main thing which I discussed was that the bullish play, which was this leg, which we have obviously discussed about, has already played out. So there are two ways to trade. There is a setup which is highly likely to perform, and then there's a setup that may or may not perform. That is the risk factor increases. So we did point out very clearly that this is the increased risk factor setup, fifth wave in play now. The simpler play was this leg. As you can see, I have drawn this circle thing. So I'll just use a yellow color now. So this was the play which we have already captured in our Slack post and whatnot, right? So the discussion basically was the market is expected to go up possibly, but it's a risky play now because of the incoming election results and all that. So the main theme was to remain stock specific. And I don't know if you guys are following me for the last 2-3 webinars or not, but I have been saying it since the last 2-3 webinars that remain stock specific, remain stock specific, remain stock specific. Fun part is that we were able to capture literally all the three, four, not three, four, five, six stocks that have made the main plays, including the play on Axis Bank, which was the biggest mover for Nifty, as well as Airtel, as well as Maruti. Literally all of them. And these were posts on 23rd, but I've been tracking them for quite some time, as you can see. 16th, 14th. We have been tracking Maruti, Sun TV, Airtel, etc., and Ashok Leyland, all these, and of course, Hero, all these major plays. And don't want to take too much time, but if you go and check what you call sector movers, these 5-6 stocks are the names in the top 10. So when I say we have to remain stock specific, there's a complete science and a method I use. Of course, I will not discuss it in a free public webinar, but it goes far beyond our discussions in even the video courses. That's the kind of discussion we do in private groups in my personal classes. But using that knowledge, I have been able to capture all these. It's right there in front of you guys, right? That's about all I can share in this public stuff. Right now, what's the play here? Of course, there is no need to say it's in a new uptrend because it has broken the high. It has taken out all the doubts and fears for the time being. So yes, we'll go and take some relief there, and it is following the counts, of course. So what's the play here? The play is one more up leg is expected, right? And not actually one, actually two more up legs are expected in this market, right? And the current play is that we are seeing a flat kind of correction here, basically something like this. Let me draw it on the rough right hand side. So this is the rough analysis for what you call Nifty here. You're welcome, Philippe. And with flat in play means that whenever this market takes out the high, 23,000 would be enough. We don't have to exactly go at the top. Then we expect to go long again. Now, the only bearish sign will be if this market, instead of going up, it breaks out this low of what is this? 22,900, let's say, and then continues to give some more bearish movement. I would not say that's expected. Generally, in cases like these, where the market is making new lifetime highs, we do expect the market to open gap up. That is, this place will not see any further trading. We will see a gap up and a green bar, and then a gap up and a green bar, and all these counts will become meaningless in a second because it will just keep giving you green bars and then a gap up and a green bar and green bar. Of course, there will be some profit booking, but it will be intraday, and that's the kind of thing you see on higher time frame charts. Something like this is what I'm talking about. Gap up, green closes at the high, and some profit booking here for short term, and then closes at the high, so on and so forth, right? That's the expected play, right? And again, I'm still suggesting to remain extremely cautious while the market is definitely bullish at this point, and counts are suggesting at least two more legs up. Election results can screw things up really fast here, right? So again, my advice is manage your risk properly, and still it remains the same. Stock specific plays are still paid much more emphasis, right? Of course, we do not discuss stocks here, and I do not want to take any more time. I think the counts are very clear. Breakout about 2300, 23,000. We look for longs, and those of you looking for higher time frame counts, we are definitely looking for 23,300 and then higher level 23,600 and so on and so forth. So I don't have to project any counts here or targets here, sorry, because it's a super bull market, so it can just take those targets out without any hesitation. That's about it for our discussion on Nifty. Now let's head over to our last chart of Bitcoin. Unless you guys have any doubts, you can just post them in the comment section. And let me just load up the chart here before we proceed. So here is the recording from last webinar. Let's just quickly check what was being said about Bitcoin in our last live webinar, which we conducted on 16th. We were discussing it around somewhere here, maybe here. Yes, somewhere here. Yes, so somewhere here we were discussing Bitcoin. This was our main theme. Actually, we had two main themes here. One was that this whole correction, let me use a different color than what was used in the last recording or webinar, sorry, last live webinar. So this was the main theme, that a correction is complete, A, B, C or WXY, whatever it is over here. And then this market can go 1, 2, and 3, and so on and so forth, 4 and 5. Second theme was that this is just a part of a correction or a bigger correction heading lower. This would make it a W and this will be going up, but it will be afterwards following a downward movement or a retracement. I think there were some short-term long plays which we had discussed possibly. And yeah, this was the second bearish or the bearish possibility, I think. Was there any short-term long play? I'm not sure at this point. You will have to check this at your end, as I was not making any trades on BTC in the last week. So let's now look at the actual chart to figure out what's really going on here. So yeah, this is the updated view. I have considered obviously both bullish as well as bearish possibilities. Let me just correct this here. So yeah, so the two plays still remain active. Reason being, this is still inside this boxed sideways range, moving from 56,446 to 73,083,879, whatever that is. So this whole range, which is very wide actually, is a sideways range. You can call it flat, maybe triangle, maybe complex. It doesn't really matter. In all these cases, what it's doing is giving unclear understanding of what is possibly going on. So this market can propagate within this range as long as it wants to, before either breaking up or down. So what do we have here, which is concrete or deducible from this is, for first of all, since this market is still propagating within the range, the general theory in trend analysis is that as long as the trend is not broken, that is a major level is not broken, we consider that all sideways movements are accumulation for further upside movement. So for now, we will have to assume that all this sideways movement is just an accumulation for a new leg up. Now, with that in mind, when will that new leg up come? We can, of course, place some alerts near the last high, 74,000. However, the problem is that this box range is not very specific. The upside level can expand a little bit. That is, the box can become something like this, right? So your upside trigger will be fired and you may take longs and they will show you some profits, but then the market may come back within this lower box, right? So just keep that in mind. If you do decide to go long, if you are ultra bullish, you can use this level as your marker for entering partial longs, but you have to keep in mind that you have to hold this for this big range. I don't know about you, but I personally can't do that. That's just too wide of a range. Even with the account I have, which is quite enough, I still wouldn't want to see this huge of a swing, and the reduced position will be too small to even bother with it. So for now, I am out of this market. Of course, I will place an alert just for the sake of tracking it, but this high level of volatility is not most people are accustomed to, and better off just taking intraday short-term moves within it. Right. So again, that's our take on BTC. Range extension possible. Bias remains bullish. Bearish possibility we have discussed, but the main theme remains sideways, then up, or straight up is the theme. So that's about for our discussion on these charts. If you guys have any doubts on BTC at this point, you can just post them in the comment section. If not, well and good. And lastly, before I exit this session, again, I would like to request that if you guys are enjoying the content, it does take a lot of time to come up with this analysis and make it publicly available for you guys. So kindly do share it with your friends, colleagues, trading groups, or anybody who might be interested in this kind of content. If you are on some trading forums, I don't know what people are following or whatever. So just share the content so that we can reach a lot more people, right? And thank you, Martin, Sushil, Philippe, and Sthit, and others who have joined in, and Luis, of course. And thank you for staying till the end. It was nice to have you here, and I'll hope to see you in the next one. Take care.